The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as you look across the grain and livestock markets and the stock market on today, Thursday, a very risk-off tone, a sea of red seen pretty much across the entire market trade. Maybe the one exception, crude oil eking out a slight gain as we worked through into Thursday afternoon. Here to talk about the markets, the overall tone and sentiment of things as we are getting close to wrapping up the week. We welcome in Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, always great to have a conversation with you, even on a day where it was pretty risk off across the board, Bryan.
Yeah, Jess, it was. And I think the catalyst behind it might have been the Federal Reserve language. Let's start with that. That seemed very what we'd call tepid in the sense of if you look at the wording, it basically said we're not going to raise interest rates for now, but we're not saying we're not going to in the future. This inflation is going to stick around longer. That's not really a good place to be right now. And I think the backdrop to a lot of this is what you said, is the energy complex. There have been a number of decisions made, in my opinion, with this administration for a long period of time that have led to this point where the market is now moving higher, and OPEC countries are cutting production. You've got today Putin talking about maybe temporarily, but suspending diesel exports. And those kind of things leave the market really not very comfortable. And we have a risk-off day there. Plus, you're picking up harvest pressure. There'll be some rain delays, but harvest pressure, and I'd say early harvest results probably are what we thought. I would tip that needle for most farmers. Say, well, it's a little better than we thought. And I think a lot of that is because they kind of braced for the worst after the heat in late August and September, and maybe it's running a little better, but it's still very early to give you any conclusive feedback on that yet.
Yeah, it's really felt like a risk-off type of reaction to the Fed, and I don't think many folks were surprised the Fed held steady this month, but the talk and the hawkish tone of maybe another rate hike, talk of getting that benchmark rate to 6.1% by the beginning of next year, I think just overall, Bryan, you and I have touched on this before, but the cost of doing business, the cost of money, the inflation pressure in commodities and more when you keep raising interest rates, that is something that really has to be taken into account, Bryan.
There's more to it. There's and it's the intangible. It's how do you feel about things?
Yeah.
When you're looking ahead, it's like, maybe I shouldn't speculate and buy some corn contracts today because I don't know. I don't know what it looks cool. That type of thing where I see when there's a little more what I'm going to call optimism that things are going to go up in value or prices are going to be volatile enough that I can make some opportunities here maybe for myself. And then just the consumer. I just think there's an eroding confident level in the consumer, and it takes a while for it to catch up into the economy that they will spend less. And the commodity market could be ahead of that with the grains. There's a lot of other variables. We know Brazil had a whopper of a corn crop, but I look at corn or wheat prices down 11 or 12 cents today. And the first thing I did this morning was read a pretty in-depth report about Australia's battle with heat right now and the blowtorch type temperatures that they're feeling and crop reduction expectations that in our market still can't generate that speculative interest that, hey, world stocks to usage are at their lowest level since 2008 for exportable countries. And we're still double-digit losses on a day like today. So just really disheartening to see that overall kind of negative tone. And I think the Fed set that this morning. If they would have come out something different and said, hey, we think this is under control, we're going to see interest rates cut ahead, we're going to get a lot of movement in dollars. We didn't see that today.
Yeah, and it's just one of those things where, when you have a risk off type of day on Thursday like we had, path of least resistance is to the downside and we just accelerate it lower. I know soybeans had the most pressure out, and with wheat a close second. Soybeans, I mean, we know there's a tighter balance sheet there. We're waiting on some of these early harvest results. As you mentioned, we still don't have a very conclusive idea. I mean, are we just maybe taking more profit in beans possibly? Is this a larger pullback? What do you think, Bryan?
So it's a great observation, great question. I have been up at night thinking about beans here, and we had what should be bullish news to drive a market higher, and you don't go higher. That's a warning. And so I need to give a little history here. So the bean market bottomed back at the end of May at 1130, rallied up to put its high for the year in, and that came in late July at like 1430. Let's just call it 1430. It's 1432. So that's a $3 rally the market put into play. And then it set back fairly hard on improved conditions through the early part of August down to 1282, rallied back here now to $14.09. So back toward the high at the very end of August on this heat. So that made sense that we got the rally back, anticipating the crop would be declining in its stature. Now we're back to the level where we were bottoming the first go around here when the weather was better in July. So very confusing. But when you look at the chart, you connect some dots, and I say the low from May to the low that we had in August, you get what I call an upward sloping line. The market broke that line here on the 12th, the USDA report. And then it rallied back up to the line and failed to get above it, and we've been down since. I think this is a big technical play in the bean market. That is, the funds are unloading their long positions. They see harvest coming. They're not seeing the export market develop as rapidly, and they're anticipating that farmers are over-exaggerating their losses in the heat. Or maybe they are. I'm speculating at that. But the point of it is, you got a very iffy looking technical chart with what we call a head and shoulders formation, that if it breaks support in this 1280 area, it points to move all the way back down to 1130. Not what farmers want to hear, not what people want to believe when they look at the crop conditions, 18% poor to very poor. But, the nature of the risk off is taking over. So that's a market that's kind of in flux right here. If in fact these yields come out and they are a bushel an acre lower, Katie bar the door where prices might have to ration inventory. And that's the environment we're in. We're looking at $1.50 down, $1.50 rally, get balanced in the beans.
Bryan, the corn market, I guess thinking out loud here, maybe that corn sale to Mexico helped us support as best as we could at the corn market on Thursday. I don't know. It feels like 475 D's corn is maybe a new area we're trying to establish some sort of support level here.
It does. And we talked about this before. Historically, August, September, we're trying to find a low in this market. I think the market's trying to figure out what the yields look like. We're hearing some really good yields in areas that got rain. Then we're hearing some not so good yields in areas that just didn't get the timely rain. So it is going to be a mixed result. The question is whether or not that result is really skewed one way or the other. Too early to tell at this point. But, few conversations with farmers today saying, 3 weeks ago, I didn't have a lot of hope. I'm kind of thinking my crops look better. It's just interesting when it's not 95 and sweltering out, what difference that might make. But the bigger issue is the same. The dollar is higher. Our exports are slow. The market has, I think, on its shoulders this concern that projected exports are going to be trimmed at some point, unless something, really changes. It doesn't take a rocket science to figure out we added 800 million bushels on the carryout in this past year due to increased acreage and higher price corn buying acres and buying good crops out of Brazil. Lo and behold, Brazil's production, you look at the world stocks, up 800 million bushels. Well, there you go. That being said, we talked about the last 10 years. From 2014, the market has taken off 25%. That takes you down to 472 from the 630 high in June. Last week's low was 467. Here we are today, in the December corn 475. So we're hovering right around that area that history says we just generally don't go much lower.
We're having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Brian, a couple other thoughts here before we let you go today. Livestock, triple-digit losses seen in cattle and hogs, and I think a lot of just the same risk-off sentiment there. Probably the biggest culprit. I know in the case of cattle, too, got a cattle on feed report coming up Friday afternoon that we might be squaring up ahead of just a little bit.
The higher a market goes when it does tip, the faster it can tip, because remember, when you've got a bull market, you've got unintended buys when it keeps going higher, along with intentional. The intentional buys are people saying, I'm buying because I think it's going higher. The unintentional buy is the guy that sold and puts a buy stop above the market and saying, well, in case it goes higher, I'm going to buy to get out. It gets stopped. It's another buy order. And then you've got people, and I saw the third one is the people that have bought and they're making money. Sometimes they just keep buying until proven otherwise. And that's been the cattle story since January. You get kind of way up here in price, though. The market really starts to look at the Federal Reserve and interest rates and economy. And, it's really odd. On the one hand, we're seeing the Federal Reserve try to, suggest that interest rates may need to go up to slow the workforce and have people not working so much and not chasing money. On the other hand, you've got this wish to keep the economy going and things moving. But the bottom line is this, and my wife pointed this out the other day. She goes, I cannot believe how cheap pork is in the store compared to beef. She bought pork. So at some point, the consumer just kind of backs away. I know we've been talking about that probably for 4 months, since May or June, when prices were in the 180s, and then we get in the 190s. So the supply side is still economically very viable for continued bull market. I worry about the demand side and how quickly the market can go down, and that's what happened here today.
I got to ask you about the dairy market trade too. A little bit more green on the screen there. What's your thoughts with the dairy market this week?
And that may have been a tip off to what we might see in cattle this week. The dairy market really got beat up hard at the beginning of the week. So again, general concerns that in the cheese side of things, we just didn't see the buyers come in and buy. Typically, we saw that start a couple or 3 weeks ago, and the market really kind of went up nicely, and then they backed away. And it's like, well, where are they? And I think there's two things going on. One, I don't think they're worried about supply. There's still an ample supply, even though the number of cows is on the decline. But two, I think the general concern there is just that do we have the kind of demand to chase prices higher, the demand from the consumer? The market would tell us the last 6 weeks we don't. We rally and then quickly hit the wall and fall off in price. When I say we, the dairy market. Now, not too bearish, the market, but not bullish. And again, this is another symptomatic commodity market that when it goes up, and it finally looks like there's justification for higher prices and a bull market starting, it gets slapped right back down. The money just does not want to hold commodities right now.
It does not.
The exception has been cattle. Yeah.
Hogs
had a brutal day today. Yeah, just brutal.
Hogs were really, I mean, worse than the cattle market. Hogs were really bad on Thursday too, Brian, like you just said. So it was a rough day there. Very, very rough day. Overall, again, very risk off. Before we let you go, anything final you want to reiterate to folks or share with them here today, Brian?
Well, like cattle, like dairy on their rally, like soybeans, when prices, head north, and there seems to be a good reason for it, it's okay to be bullish, but just recognize that the marketplace is not in the same environment it was a year and a half or 2 years ago, where bullish dots continued to sort of develop and you could connect those and the market went higher. And the biggest regret people had was selling something at a high price because it went higher. Get more prepared for rallies not to last. In soybeans, we're still near $13. The low is still $1.70 away from where we were in May. So has the world changed much to May? We know Brazil's got a big crop. Argentina did it. We know China's economy is worse than it was in May. So just kind of think about those things and create a balance. If you sell cash, beans look to retain ownership with some type of an option strategy where risk is quantified. The whole goal is to quantify risk. We could have a lot of volatility ahead of this market, up or down.
Bryan, I know if folks have questions, a phone call, an email, looking at the Total Farm Marketing website, all great ways to get in touch, isn't it?
All great ways. Phone number is 800-334-9779. Bryan with a Y at totalfarmmarketing.com on an email, or totalfarmmarketing.com on the website.
Bryan Doherty, always appreciate the time. Thanks for joining us here today on Market Talk, and have a great weekend. We'll talk to you again soon.
Awesome. I want to thank you, Jesse. I appreciate it, and have a great day.
That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.